and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by giving an update to my portfolio since a lot of stuff has happened within this week, and afterwards I will answer a question from the audience as well. So as always, the first thing you immediately notice is that there was a green circle for this week's episode. If we then go to the Portfolio Values tab, you can see that I have added an additional $5,000 into the portfolio, meaning besides the capital which I had from my sell from last week, then I have actually also done some additional sells. If we go back to the overview here, you can see that I no longer have CVS Health Corp, I do no longer have Cardinal Health or ExxonMobil. So the cash that I have received from these three companies, plus the additional cash that I had from Simon Property Group, and an additional 5,000, I have reinvested into the portfolio, meaning that I have done a purchase of a little more than $19,000 into Activision Blizzard. So why have I made Activision Blizzard my biggest investment in the portfolio so far? Well, this is purely based on me thinking that Microsoft will be allowed to buy Activision Blizzard. And if you didn't watch my episode from last week, I will just show you my Excel spreadsheet once again, because you can see here that I have bought the shares of just above $80 on average per share. So if we look at my calculations for last week, you can see if you can buy the shares in Activision Blizzard for around $80, well then you will log in a return between 9 and 18.75%, depending on when this deal will actually finalizes with Microsoft. And of course, as I mentioned last time, you have this risk that Microsoft will not be allowed to buy Activision Blizzard, or that Microsoft for some reason is not willing to pay the $95 per share as they have announced. But currently this is something that I am willing to invest in, since I believe that it is really likely that Microsoft in fact are going to go through with this buy. And when I look to the returns in a historical context, getting an annualized rate of return between 9 and 18% is something that I would actually be quite satisfied with. So I was quite surprised to see that the shares of Activision Blizzard actually dropped below $78 within this week, meaning that I could have done a better investment if I have been a little more patient. I thought that the shares in Activision Blizzard would actually quite quickly go up to maybe $83, simply due to the fact that then the deal will be less attractive based on this potential purchase from Microsoft. And just to illustrate my numbers here, I have bought 245 shares, where I would expect to receive a little less than $15 in profit per share if this deal goes through, meaning that I expect to return a little more than $3,600 from this investment. So this is not so much a dividend play, this is simply a play on getting a total return between the 9 and 18%. And at the same time, it is actually a company that pays just a small dividend. So that is actually something you can put on top of this, if they of course pay out a dividend this year, since there's no guarantees. So all in all, this looks like an attractive investment to me, and that is why I have purchased it. So a natural question to ask is of course, well, why aren't I investing more into this if I believe that this is such a good investment? Well, even though I think the odds are in my favor, I need to consider the possibility that I might be wrong. So if you do a bet and the odds are in your favor, let's say it's 60% in your favor and 40% not in your favor, well, this is a good bet to take if you can do it 10 times or more. But if you can only do it once, then the odds really needs to be heavily skewed in your favor, because if you are wrong, how much do you stand to lose? So that is why I found that around the $20,000 mark was all the cash which I currently have from all my sales. So I simply put all the available funds that I have currently into this investment. I would never go 100% into one investment, simply due to the fact that I need to consider that I could be wrong. The next natural question to ask would be, Well, how about if you expect the stock market to keep dropping as we have seen here in the beginning of 2022, since you are seeing high inflation rates and increasing interest rates? Well, if you expect the stock market to drop in the near future, then obviously it should be possible for you to pick up better deals than a return between 9 and 18% on an annualized basis. But the only thing that I personally know about the future is that it is uncertain. So I look to this in a historical context and say, would I be happy to get an investment return between 9 and 18%? And to me, the answer is yes, because I believe that the risk versus reward is worth it for me. But if you know more about the future or feel more certain that you will be presented with better deals, then obviously you should stay away from this one. If we then continue to the dividends tab, then you can see that the dividends from January is exactly the same as last week. So obviously I have not received any new dividends within this week. And if you look at the estimated yearly income, you can see that has dropped. And that is due to the fact that I have sold out of CVS, Cardinal Health, and ExxonMobil. And I do not mind seeing a drop in my estimated yearly income on the dividends, since I have done this new investment in Activision Blizzard. I know it goes a little against the lazy money game, but I believe that the market is currently presenting an opportunity which is attractive, at least to me, and that is why I have chosen to pursue it. And now that we are on the topic of dividends, I was really happy to see when I received this email that Nexstar Media has increased their dividend by 29%, meaning they have increased it from 70 cents per share and all the way up to 90 cents per share. And it's not too surprising to see news like this, of course, have a positive impact on the shares. So naturally they are trading at a higher level currently. And of course I'm quite happy to see that my next payment from Nexstar Media Group would be $45 instead of $35. I know a lot of people say this is just $10, but I mean, if you are a dividend growth investor, this is really what gets you excited. If we then continue to questions from the audience, then I have received a question that goes like this. If I buy Activision Blizzard anytime prior to closing date, will I be eligible for the $95 price buyout by Microsoft? To my understanding, if you have shares in Activision Blizzard, that means anytime that Microsoft are finalizing this deal, then you would be eligible to receive the $95, simply due to the fact that all shares in Activision Blizzard will be liquidated and all shareholders are receiving $95 per share that they are holding. So if you are able to buy shares at any time prior to this deal finalizing, you should be compensated by $95 per share. Of course, be aware that there is the risk that Microsoft will not be allowed to do this buyout. So with all these changes to the portfolio, where you can really see the change in the portfolio pie chart, since the communication service sector now takes up 19.5%, I'm happy to announce that this was episode number 100 towards my goal of reaching financial independence. So if you enjoy content like this, then please consider leaving a like. It really helps out the channel a lot. And until I see you next time, bye!